Okay, everybody, looks like we are live. How you doing? I'm happy you're all here. Even you, Goulstein. Yes, I miss you when you're not here. Everybody. Anyway, people, let's talk post-market report Tuesday, November 28th, 2023 here. Let's talk. I don't even know where to start. How about this? I'm getting a lot of questions about banks and credit unions, and a few of you have raised a very, I would say, important thing that we need to talk about. So, although, look, first of all, I never said, never ever said that credit unions are risk free. In my perspective, gauging from what is happening to these institutions at this time, they are a better bet than a commercial bank. Okay. I've covered repeatedly, once anything leaves your hands and ends up someplace else, there's some type of counterparty risk. You can't eliminate risk in this kind of a situation at all, but you can try to minimize it. Now, the questions I've been getting with regard to credit unions, and it's a very good one from a whole bunch of you. What about these loan defaults? As a matter of fact, let me read this to you. This is pretty important, and it plays right into what I want to discuss about credit unions. So this is according to Ned Davis Research, which is a global provider of independent investment research solutions, blah, blah, blah. They've been around quite a while. Well, this is what they had to say. Consumers are facing widespread rise in loan delinquencies, and credit card delinquencies have reached their highest level since the financial crisis. Now, this is no secret to anyone that follows this blog. This is going to go on and on, and it's going on and on by design. Do you remember when people were seeing their credit limits just rise by a miracle? You see, the central banks, the Federal Reserve, knew people would go out and they would borrow and borrow and borrow and borrow into oblivion. Certain banks are going to be chosen to survive here. All right, a lot of banks are going to be going out. They're going to be going under. Hold that thought. Now, going back to the credit unions and the question, all right, the question is, hey, Greg, with these loan delinquencies, how does this affect credit unions? Obviously, they're going to take a hit here. Credit unions do lend auto loans, mortgages, all that kind of stuff. So there's a lot of bad debt here. I don't know how to say this another way, people. And I've been warning you about the issues regarding the banks now, literally for over a year. And we covered this before anybody else. The entire financial system has never been sicker than it is today. It's falling apart. The liquidity crisis is full on. You got central banks creating more debt than they ever have, all off balance sheet. Okay, you're not allowed to see the secondary balance sheet of any corporation. They all have two, nor the Federal Reserve. Okay. Sure, you can look at the public balance sheet, and it's beautiful at what, $9 trillion at face value, of course. But again, it's this whole thing is a disaster, and it's unfolding faster. Now today, with this market, just real quick, and again, I have a lot of stuff to talk to you about. We put on gains. We put on gains as we were watching a phenomenon occur, a phenomenon that you and I predicted would happen and is happening. That is, we're watching continued weakness with regard to the dollar. The dollar fell again. Do you realize the 10-year yield was over 5% not too long ago? Now we're at 4.33 today. That's a profound move. On the back of the dollar falling today, we got commodities getting a bit higher, crude oil, gold and silver, Bitcoin about 38,000 right now. There's no top to this. Is it volatile? Absolutely. There's a lot of volatility going on here. And we should expect that, especially with crypto. But with the market, the stock market, again, low volatility, almost nothing. That should raise all of my lions' eyebrows. All my lions know that low volatility precedes high volatility. It's always the same. So don't get used to this. Don't get used to what you're seeing here. They're going to probably keep this all propped up, as we've been predicting, throughout, until Christmas here, year end bonuses for the fat cats. You know how that works. I don't want to talk about it again. It's getting out of control. But they're going to keep, it seems to me, watching the dollar, watching bond yields, that the Fed is determined to pump this market. And then again, the next phase is going to be rate cuts. And I'm going to tell you again, you see, here's the other thing. You have to understand. The Federal Reserve right now has the consumer by the throat. And you can see this by, again, defaults across the board. People can't make ends meet. They're trying to claw themselves up to a middle class existence, and they're basically destroying themselves by taking on debt loads that they can't possibly ever pay off. So debt defaults, even for credit unions, is going to get worse. But again, look, I've been telling you, never keep a single dime more in any, whether you're in a commercial bank or you're in a credit union or anything else in between. Never keep more than what you need in these institutions. Again, we must participate in the system they have given us. Understand? I think we all got that. Unfortunately, it's very hard to sidestep that. People really don't transact in, that's another thing I got a lot of people yelling at me for about today. I said earlier today, and I've said this before, that cryptocurrencies, this is a misnomer. Do people actually transact in cryptocurrencies? It's pretty rare. Okay. Usually these things are held by people like myself. I bought gold, and I told all of you when I did it with Bitcoin. I sold a while back, sold Bitcoin, bought gold. Okay. So yes, I have transacted, and I bought gold with Bitcoin. So yes, I have transacted in Bitcoin, in cryptocurrencies, but generally this is not the case. Cryptocurrencies are things that people hold on to, kind of like gold or silver. It's pretty rare for people to transact regularly in these. And that's another reason why cryptocurrencies have zero threat, zero, to the soon to be released central bank digital currency, which will actually be a currency. Okay, totally different asset class. All right. I know there's a lot of people saying, oh, the Fed's not going to allow competition. There is no competition. The Fed knows it's a misnomer, although you can transact in these things. Most people don't. But that's okay. VDog, thank you. Brokers, dude, Elijah, I've spoken about this before. There's a lot of risk there as well. Your brokerage account probably insures your cash. They don't insure your investments up to $500,000. If you lose, you lose in this market. You lose. But that's kind of a good question as well. Anyway, so on the economic front, now I want you to think about what I'm going to tell you. So, what are we finding out as of late? Home sales, and don't take my word for this. Okay, look into this yourself. Have now hit historic low. And this is also a problem for the banks as well. Again, no deals, no loans, blah, 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 blah. But meanwhile, home prices continue to rise and rise and rise and rise and rise. Supply and demand doesn't matter anymore. You have to understand that. And that's something else here. So we heard from the two members from the freak show Federal Reserve today. So Fed President Waller, this guy admitted that the economy is slowing. And then we got this other one, Fed President Bowman. He's saying that the Federal Reserve needs to hike rates further because inflation is still out of control. Duh. Look, this lull that we've seen as of late with regard to energy prices ain't going to last. Okay, it's not going to last. There's no way it's going to last. And then when that turns around, and it will, people are going to be freaking out yet again. But you shop for food, and so the prices aren't going down. Yeah, sure, they're making the products smaller and smaller. Soon you can't even be able to get a microscope to see these damn things. I tell you, man, it's so sick. But anyway, I wanted to address something else here. So I've been saying, and I think most of you here are probably on the same page as me. Okay, what am I talking about? I'm talking about rate cuts. The Federal Reserve already has the consumer by the throat, as we've covered just a little while ago, and we cover every freaking day here. The consumer's done. They're maxed out, and they're going to continue to borrow and bury themselves in a worse place than they are now, unfortunately. And this, you and I discussed this phenomenon years ago, how this would occur. prime members of the middle class here trying to maintain that illusion of a middle class existence here. They're trying to borrow their way into some kind of prosperity. Ain't happening, unfortunately. But anyway, with that said, rate cuts are coming, and it's not going to help the economy, and it's not going to help the consumer at all. You have to understand, the issue with rate cuts, again, this was instituted to cut off the availability of credit, mostly to small businesses who rely on credit to function. And again, to fulfill the corporate agenda. You all know this. I'm preaching to the freaking choir here. But now that that's pretty much done here, we're seeing business closures more so than the financial crisis, more so than the scamdemic, convid, whatever freaking thing they got. I want to throw at us, but that's just the way it is. So rate cuts here are going to be very, very nice for the stock market, but it doesn't matter anymore. Okay, the market is managed. The Federal Reserve has got the general public where they want them. So, but again, they got to make sure that wealth gets pushed upward to the 1% and 2% who hold the vast, vast majority of stocks. So this is just another mechanism to suck wealth from everybody, push it up to the 1% and 2% and tell you everything is fine. The illusion of the market. The market eventually is going to melt down. But believe me, there's going to be some people who are going to have a parachute to get out of here, and most people are not. Most people are going to get caught again, as they always do, on the wrong side. And then they go, what happened? Make it up. Make it up. Make it up. You can't do it, people. It's impossible to do. I'll tell you something else. I was looking at the MMRI. I think it's below 280 now. I don't even know. It's dropping precipitously on the back of bond yields falling, on the back of the dollar, relative strength dropping as well. I'm going to say something right here and now. As part of my prediction, 276, thank you. 555 Frontier, appreciate that. We're going to see, I'm going to tell you right now, next year, the MMRI drop below 250. I would not be surprised to see the MMRI drop. Maybe it wouldn't surprise me to see the MMRI drop below 200 moving into next year. We're going to get rate cuts. They're going to weaken the dollar moving forward. Very stock market positive. I can tell you this too. By next year, definitely, no doubt about it, the stock market is going to be a new record highs at one point next year, 100%. Especially when they get crude oil to play. Okay, crude oil is going to start playing here at one point. Believe me on this. And that's going to boost the energy sector. That's going to boost the financial sector. And it's just it's the way it is. I think we're pretty much all on the same page, right? Anyway, people, so that is the story. I wanted to bring this up too. I wasn't going to, but let me just do this to have a little fun. So I get an email from my electric company here. Oh, Operation Roundup. They're promoting what they're calling Operation Roundup. You live here in Florida, here in Bradenton, like me. So Operation Roundup. So what they want you to do, what they want me to do with this email is round up my bill, let's say whatever it might be, round it up to the next dollar, and they're going to donate that difference, Operation Roundup, to some worthy cause. How about Operation Round Down? Why don't they round our bill down $1 for whatever, and they donate it all? You see, it's always we. We got to pay. We. These corporations, they got us by the gonads, okay? Operation Roundup. We're going to do something really, really nice. How about Operation Round Down? They can do the same damn thing. No, but the corporate fat cats, they got to get their big fat bonuses. You can't make. How about Operation No? Exactly. It's too much. Yes, the account. No, I couldn't exactly say that, but I'm glad you did for me. All right, I'll answer some questions. Your thoughts on a Bitcoin ETF? I hate it. Okay, I despise it. Let me tell you why. All right, the whole premise of cryptocurrencies would to be outside the system. The fact that Wall Street has their hands on this and with an ETF or something, I just don't like it at all. I'm sure it's going to be an interesting prospect for a lot of people, but I just don't like it. Of course, Wall Street's going to get their hands in anything and everything, but I definitely don't like it. Anyway, people, anything else specific? Thank you, Axiom Lava. Where's everybody else around here? Love it. How you doing? Goldstein. Anyway, Anacott Steel, Goldstein. You know my thoughts on Anacott Steel. I'm not going to tell you my thoughts on Anacott Steel. Axiom. Yeah. Where's Magic Miko? Where's Lord Humongous? Are they here today? Anyway. People, you know what I'm going to do. I already told you. I'm waiting patiently for this market to drop. I'm going to buy the dips here. I'm getting longer this market as long as they keep rates suppressed, as long as they weaken the dollar. Because what does that do? What does it do, people? Tell Greg Mannarino right now. What happens when central banks artificially suppress rates and weaken their currency? What is the effect? What are they trying to achieve? They're trying to push cash into the stock market. Exactly. So that's what they're going to do here. And that presents other opportunity for us. Again, that cash is going to come from other things. So commodities, I believe, could waver around a little bit as the Fed manifests and makes sure that they continue to prop up the market. That presents opportunity for us to buy more. So we're going to get along this market. Albert R., thank you. Longer. Again, look, I'm telling you what I'm doing. You do what you think is right for you. I think the market's going higher, probably much higher, as long as they suppress those rates, as long as they weaken the dollar. Again, the whole mechanism behind this is to open up that doorway to allow cash to make its way into risk assets. Risk on. The game remains risk on. Again, they could shut down the economy like they did during COVID, all right? And the market will go higher. Again, the worse off the economy gets, the market's going higher. You know about this. All of you know about this. Anyway, people, that's where we are. I think all of us are on the same page here, and I'm very happy to say that. Anyway, anything else before we cut out of here? We're getting 17 minutes into this. You know, some of you don't like these long videos, and I get complaints. You're licking silver. Yes, I've been known to lick silver in the past. I haven't done it in quite a while. It's probably good for you, right? Sucking on some silver a little bit here and there. Probably. Anyway, all right, people. Look, this guy loves you a lot from the heart. I mean that. Please share the video. Get it out there. Those thumbs up. We need them. It gets this stuff seen. The algorithms pick it up. I appreciate all of you so much. Thanks for your support, your friendship, your love, everything else. We got this. I don't care what they do to us. I don't care because they can't beat you and I. We're too far ahead. We're too far ahead of the curve. It's the truth. All right. I'm out of here. I will see you all in the morning. Take care.